Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 19th of October, 2015, and ending Friday, the 23rd. 2 full weeks left in October. We've just gotten through options expiration for the month already. We do have 4 days left, and they're the bigger days, especially Wednesday and Thursday, of core earnings season. So it is a slightly different environment from a trading perspective. But hopefully things start to cut loose by Wednesday or Thursday once a lot of these earnings are behind us and the forward guidance from companies has sort of painted the picture of what's to come economically, and it doesn't seem to be anything too disheartening at this point, at least. So we'll see what we get. Of course, some of the big companies still left to report. Here's a look at the ES front month futures contract. This is basically the S&P daily chart in futures format, which is the preferred format, of course, for traders. You can see the green line was the 61.8% fib retracement of the August plunge. And after slipping back under it Tuesday and part of Wednesday and even into Thursday, we finally rallied Thursday late and Friday a little bit, even though it was options expiration. And so we ended up now closing above that line. And this is the wall. This is the bumping off point. The lows of most of the rest of the year was around this area here at 20, let's call it 2030 and 2035 maybe, and we're about to hit that. You can see that's the lows from March, April, and July. So whether we can get back through that is a question mark. Obviously, this is the time of year where bottoms, the market tends to bottom, and of course, the bottom was formed in August at this point. Is this a double bottom formation, and we're already set to go, and we're off the lows and going to head up? Remains to be seen. It's a little strange, a little early on the timing if that was the bottom compared to most years, but it's still in the realm. We do, of course, have the potential of a government shutdown looming on around November 3rd. That would have an impact and a negative impact on the market if that occurs. So keep an eye on that. That's going to be a news-driven item, obviously. And we may, unfortunately, see some light volume days leading up to that while everybody tries to figure out if Congress is going to get its act together once again. So here is, let's go through the S&P. This is the cash index. It was up 9 on Friday with options expiration, most of it very late in the day. It was a flat day until then. NASDAQ 100 up 20. We'll look at the intraday action in a bit. The SOX was up less than a point, so a very flat session there. Here's the biotechs down just over 3. That's almost a nothing. That's a blip for biotechs. Here's crude oil, closed at 47.25. That was up a bit. The VIX dropped back to 1505. So fast we've given up the VIX. Only that one spike. Remember, the VIX over 40 is what gives you the extreme reading. And in the case of this year, as amazing as it is, that one day that we closed over 40 was the low day in August, and we've never really done anything lower since then. So I was expecting a little more volatility and not just a one-day spike, and we just didn't get it. So the VIX did its thing at this point. All right, here's a look at the trend. Now, this is very important, okay? The trend 10-day moving average is 1.08. That's up again, obviously, after a 1.29 reading today. So, we did get just under the 0.85 reading on the 10-day moving average of the trend the other day, and that's usually a sign of a top in the market, but so far we're up. Now, keep in mind, options unraveling occurred on Wednesday. Not much real action occurs once that's done through expiration, which was Friday. So Monday's going to be probably more useful than Friday or Thursday were in terms of telling us what's really going on. Here's a look at the NASDAQ volume. This is kind of a standout point. Monday and Tuesday were really bad. 1.2 on Monday because of the Columbus Day holiday. Tuesday, 1.4, which is awful. One of the lowest of the year, which was kind of a surprise. I guess everybody was waiting for earnings. We did get back up near between 1.7 and 1.8 for Wednesday and Thursday. Friday is the weird one. Friday's closing volume, 1.67 billion shares. And you might think, oh, that's a Friday. But keep in mind, that was options expiration. Usually you get some pretty heavy movement as they roll the contracts and close out the stock positions. It's not usually real volume, but it still is there. You can see a lot of these individual spike days throughout the year are usually the third Friday in the months. And this is just really bad volume. It suggests that really there wasn't much going on in the options world the last month net. And I don't know. I'm not sure exactly how to read that yet because there should have been some pretty big options positions on after the plunge in August. So we'll have to keep an eye on that. Advanced decliners almost flat on the NASDAQ, plus 615 on the New York on Friday. Google gained 230. Boy, looking at new breakout highs potentially in Google. Apple down 82 cents, really not doing much. Amazon up 832. Look at this. New closing high on Amazon. What a stock. Netflix, on the other hand, far more negative. All right, so let's take a look at the intraday action from this week. This is in 10-minute candles. And you can see Friday, Thursday, Wednesday, Tuesday, Monday, and part of last Friday. So last Monday was a flat opening. We drifted pretty much, that was that Columbus Day holiday. Tuesday gapped down, filled the gap, topped out, rolled over, closed at the lows of the day. Wednesday, flat opening, closed lower. So again, that was all looking like what we were expecting, given the fact that we were holding against that 61.8% fib of the plunge, and we couldn't really hold above it. Volume was light. We did get an options unraveling move on Wednesday, although if you look at Thursday, it almost feels like there was some there too. Thursday, we gapped up. We were flat for the first hour and a half, and then we rallied actually pretty hard, pretty consistent all day. We had a nice trading day. Actually, this has been a great trading week for us. You should go back and look at our results. We had a wonderful trading week, including Adobe breaking out on Friday, and even on options expiration, a big winner on the daily charts there, and really just nailed it. I haven't done the count, but I know we won 80+% of our trades for the week on the stock side. So it was a really nice week, and some of these things moved very well. Rich nailed a great winner on Friday in win, and that's despite options expiration. And then Friday, options expiration, open flat, pretty much flat most of the session, rallied a bit in the last hour or so and closed at the highs. So that's the highs of the week there. The NASDAQ side, pretty much the same story, not much new. We did leave gaps behind on both from Thursday morning, and those we should go back and fill those. So we'll see what happens. Quick look at the economic data coming out this week. It's a limited week. The main focal point, again, is going to be the fact that we're still in the core earnings. Wednesday and Thursday are the big day of earnings. So we've got Monday, we've got the NAHB Housing Market Index. Monday's also the first day of the new options cycle. Probably a little slow. Not slow like last week on Columbus Day, but a little slow. Tuesday, housing starts and building permits. That's not going to move the world. Wednesday, MBA Mortgage Index, crude oil inventories an hour in. Again, nothing there significant. Thursday, the weekly initial jobless claims number, FHFA Housing Price Index, existing home sales, leading indicators, natty gas an hour in. Friday, no numbers at all, no expiration, so it's just a regular Friday. But keep in mind, Wednesday and Thursday with a lot of economic numbers or earnings numbers coming out, maybe we start to shake loose finally a bit and trade for real instead of this what we call the core 8 days of earnings, which is typically a slightly different environment. But as they get all the earnings behind them, they start to trade more normally again. Friday is a big question mark. There's no data, but earnings are behind us. Do we get a move there? The following week is a full week. We close on Friday, the 30th. That's the end of the month. So a Friday that will be end of the month is nice. You don't like to see the end of the month be Tuesday because it's usually a slow day as they print the statements and everything. They get the stocks where they want them a day or two in advance. So at least this is on a Friday. Friday can be slow. It's going into Halloween. Everybody's having a good weekend there. Just keep in mind, Europe has the time change next weekend, the weekend of the 24th. And then we here in America have the time change the week after, which is the weekend of November 1st. One little announcement, our 6-month stock mentorship program now includes a money-back guarantee. You can find details of that on the site. We've had a very good success rate with people who follow through on the program the way that we present it. So we're comfortable making that offer to people. Charts, as usual, brought to you by eSignal. You do not need to use eSignal to take our program, but it certainly helps in our opinion. We do find it to be the best charting package out there. Everybody have a great trading week. We will be in the lab trying to help you out. If you do find these videos useful, please like them on YouTube. Have a great week.